Hey guys, Mike here. So, oh boy, what a day in the market. I mean, super green after a very weird start and chopping and everything else. But about, was it 11:30 or 12? Started taking off and it just didn't stop. And everything that was red started turning green. Even Tesla at one point in time went green, I believe. But there's two things I'll show you in this video. Watch very carefully, especially one of them. Another thing I'm talking about is kind of like what I'll call the stock of the day, the surprise move of the day for a stock. It's about time, but it was very surprising. I'll show you how definitely big money pushed this up. Hedge funds were definitely coming in on this one for sure. And then we'll go into some other things when it comes to the stocks and the S&P. If you didn't hear, finally hit an all-time high. And why did it do that? Okay, and we'll talk about that. But we did get, I like to update you guys on this because you say you want it updated, some housing data. And I tell you what, you don't think the numbers can get any worse for the home data. Here you got U.S. existing home sales. You can see this chart here. But the total number was so low sold for 2023 that it was lower than 2020 when we shut down the freaking country, for crying out loud. Isn't that amazing? 3.78 million versus 4 million in 2020. And then you look over here at the chart and you can see minus 1% month over month, which I don't think surprises people. And I think when you just look at this summary here, I mean, this sums it up, right? December home sales dropped 1% from November, 6.2% year over year. Annual sales in 2023 at 4.09 million, lowest since 1995. Regional variations. Sales unchanged in Northeast, down in Midwest, down in the South, but up in the West. Why is that? Because people are selling those homes out there that are really expensive and coming to the South here especially, and they're just buying for cash. And they're getting a big plot of land, nice big old house for cash, so they don't have a mortgage. All right, mortgage rates declined from the peak in October, now at 6.89%. Inventory down 11.5% month to month, but up 4.2% from last December. Median home price in December, $382,600, up 4.4%, which we talked about. Homes on the market longer in December, average 29 days. I've been hearing this from you guys in the comments as well about that. And all cash sales and investor purchases decreased slightly. And you hear people say you can't have a strong economy without a strong housing market. But this is just the weirdest housing market we've ever been in, right? Because I'm not selling my home. You already said you're not selling your home. Who in the world will sell their house and go, unless you're moving from the West, of course, over to the East and the South especially, to jump into some 6-7%, mortgage at a much higher price than what your house was 2 or 3 years ago, or about 2 or 3 years ago actually. And then of course now you don't even have any competition between existing home sellers and new homes. It's just really new homes that people must be buying because existing home sellers are like, I'm good. I'm gonna stay where I'm at for now. And so, I mean, it's going to challenge that theory. Can you have a strong economy without a strong housing market? That's what we're going to get to find out this year. I mean, I always said things are broken, but let me know what you think in the comments. Again, you see the inventory. I don't know how housing prices drop in so many areas if your inventory is low. I don't understand that. That is not supply and demand theory, and so I don't get that either. So I don't know how those housing prices are going to come down. And I think most of you agree with that in the comments. Some of you do not, but feel free to put your opinion in there. I always like to hear it. Now, obviously S&P all-time highs. There it was. We've been waiting to see why this would happen. It's been lagging just between that 4,700, 4,800. Finally broke that. Big week of almost 3% for the S&P, basically off of yesterday and today. And when you look at this, of course, you look, okay, what took so long? Because the Qs have already hit it for sure. The Dow had already hit it. IWM lagging by a mile, of course. And it's just simply the Magnificent Seven finally kicked in. There's no way the S&P hits all-time highs without the Mag 7, and you can see, right? Look at this right here. It was lagging. What was the S&P doing? Sitting in this range. As soon as it kicked in, boom, because it's over 30% of that index. Bam, see you later. No problem. In a very short amount of time right there. So it was like, that's all you needed. And of course, you look at the Qs, don't leave that one behind. That was already at all-time highs, but it was set beneath that trend line. And of course, as soon as obviously Mag 7 kicks back in, money starts rolling back into it because they don't think they're going to get the rate cuts. The 2023 playbook all over again. There you go. And when you look at the Qs, the big question is you got a bullish MACD cross on the daily right there. RSI is somewhat going into overbought territory. But the question is, are we going to get this right here, right? Well, you had it going into overbought territory, but you had a bullish MACD cross, and this thing just kept on going. Actually, it went up, was at 1.36%, 2.62% about 2 weeks. All right, so let's see if that's what we're going to get here. I know somebody in our Discord was talking about that. When you get that look, this thing can just keep on melting up on you. And if shorts are forced to cover, that's what's going to happen. But really what you see is, again, Microsoft, new all-time high again. Meta just set a new all-time high. There it is, finally, officially, after they beat this thing down to nothing. What was it, below $100? End up finally getting it there. That's what they've been wanting. NVIDIA, every day is a new all-time high for NVIDIA, as we can see right here. You look at, and with that one, I mean, it don't matter. The RSI MACD don't matter on that one because it just does what it wants to do. AMD, again, it set a new all-time high yesterday, set another one today, monster move. And then we talk about some laggards. You got Apple, right? Bounce off that 200, and it's no coincidence. Once it bounced off that 200, it had these huge 3-day candles right here that everything else started kicking in, going crazy. And it just got that bullish MACD cross right there on the MACD as well. So this one, is above the 50 now. It closed above the 50. And on the weekly, you can see, I mean, the RSI never closed below the 50. It looks like a bullish MACD cross. So this one can continue to run, right? Amazon's lagging as well, nowhere near its all-time high. I'll go into a lot of these charts in more detail on Sunday when we set up for the week and everything. So it'll finally be a normal week with no holidays, which is nice. But again, we'll go over Amazon because it's the biggest. Well, Tesla's the biggest laggard now. It wasn't, now it is, but Amazon is definitely right there. And then, of course, Google also is not at 52-week highs. It finally broke into this range, which I've been talking about for months. And we'll see, if it can move through here, but it's only 3% away from all-time highs right there. And this one has like price targets of 175, 190. Again, it doesn't move like Meta or Tesla or any of the rest of those. It's a slow mover, just like Amazon is. But we'll see. And again, I'll go into these charts in way more detail and stuff on Sunday. But, you look at Tesla, again, this one, it went down again today, got down to 207. Buyers stepped in. The market started to rally is really what it was. And so it came up, and that trend line right there, I'll go into more details. I just added that today on Sunday for you, but that's another trend line. That's where it rejected at. I've seen that on a lot of charts, is why I added it. Now, the stock of the day has to be PayPal. Look at that candle, but then look at the last 3 candles, right? And remember, this was happening during downgrades. So it was fighting through downgrades, right? What really surprised me, though, was there was that 200 moving average and that trend line that had rejected off multiple times on this huge downward trend, right? And it just blasted through there. Now, what does that tell us? That tells us that ain't us. That's not retail pushing like that. To be able to push through like that at that level, that is the big buyers, the hedge funds, things of that nature coming in. And you can see these candles don't look huge, but when you look to the left, this is big volume, right? I mean, literally it's twice as much, sometimes 3 times as much as you've been seeing. You see the incline up? Look at that one today. Boom. Shoving it right through that 200. I mean, like it was nothing. Went through a hot knife through butter right there. And then you see all those green candles. So if you look to the left and you look to the right, major difference. 2 to 3 times as much volume right there. And so that is not us pushing this up. And when we look at this, and again, I'm pulling out so you can kind of see it even better right there. And when we look at this, as far as panning out and stuff, that trend line right there is where it's rejected. And that's the one that's been sitting there since November. That's where it stopped today. If it can push through that, right? That right there is that big gap has been sitting there for quite a while, since August. And so if it gets up in there, I'm going to pull this volume profile right here. It's going to go through it like a hot knife through butter, right? See that volume gap? Especially if we continue the momentum. And so up to 72, which we've been talking about, I swear, for like months now, since it started moving up in November, maybe that will finally happen. Again, it pulled up all the other fintech stocks too, because they move as a group. Square was the hot one. It kind of cooled off. Now you got PayPal. And I mean, this rally was so hard today, even a lot of the Chinese stocks participated. Even BABA came up, JD, the CWeb, right? KWeb, all those. One thing to watch out for, and it could limit the move up on these, is once again, I put in the Friday's news brief here for the members, is you have China out there, not outright ban short selling, but definitely put restrictions on it. And then, of course, you had another major brokerage firm, actually its biggest, come out and start restricting short selling for some clients amid growing outside losses in local stock markets. And so what this does is, and I'll read this, the state-owned asset manager stopped lending stocks to individual investors and also raised its requirements for institutional clients early this week following instructions from regulators. The report comes as Chinese stock market has largely extended a 2023 rout into the new year amid signs of little improvement in economic growth. And the reason why I say it can limit upside is because the reason why you get moves like today and we get those big rallies like from November up is because shorts have to cover. When they cover, that means they're buying back the stock, and a lot of people short. Okay, we're talking, well, I mean, just in the U.S. billions, but I mean, you know, and right now I showed you the other day what are American firms doing? They're shorting stocks, right? They're going long the Mag 7, they're shorting the Chinese stocks. And so if you start limiting that, you're going to limit that explosive move to the upside if you do ever have that turn, which is why you could see these stocks still just lagging. Like you wouldn't see these explosive moves in our markets if we actually limited short sale. As much as I hate the manipulation, like, you know, I don't mind people shorting stocks. It was when the short reports come out. That's what bothers me. I don't think you should be able to short a stock and then be able to put a short report out about it. I think that's completely wrong. And so you've noticed how you don't see as many short reports coming out now, right? Since all that kind of blew up a couple of years ago. But over there, that can limit that explosive move. Not saying they can't move up eventually, just the explosive move of it. That's what shorting does and stuff. And whether the shorts are covering voluntarily because they're getting burned and losing, or they just go, okay, it's time to turn. Let's flip sides. Let's go to calls, not puts here. And they start going along the stock, that can limit it. So we'll see what happens. Now, two things to watch out for here. Two very important things. Is HYG, which of course is high yield corporate bond ETF, which goes hand in hand to S&P. And you can see, it was mostly red all day. I think it went slightly green at the very end right there. But you see it's very muted. And when you look at SPY or S&P right here, you pull that up, you can see they kind of went in two different directions today. And so this is something we're going to watch, see if we get a bigger diversion here of HYG going down while S&P is ripping to all-time new highs and stuff. And again, this stuff can play out for a while. We'll have to see, but we just want to see if there's a divergence and if the bond market is not buying in to this rally. The other thing is the dollar still being held down by that 200 moving average. Like that's what stopped that surge right there. Still sitting on that trend line of support though, right? So it hasn't broke down yet. But let's see, because if this busts up, that's bad for stocks. If it starts to sell back down or even stays where it's at, that's going to be good for stocks. And so those would be two important things to watch, as well as yields. I mean, I see people predicting the 10-year to go back up, which it could by year end, not right now. But again, we'll see how next week, now that this big OPEX is done, it's one of the biggest of the year, right, with these option flows. And in tomorrow's video, on Saturday's video, I will show you the power of those option flows. I'll show you this person made out like a bandit, millions of dollars in a very short amount of time, but how that really moves the markets and how it can set the tone and everything. So we'll see what happens tomorrow. You saw the VIX down today, right? We had the VIX expiration, was it Tuesday or Wednesday? Big spike, market goes down. All of a sudden, we have OPEX today. All these different flows are changing hands and everything, and boom, you get this huge like rocket ship up and everything. So again, tomorrow we'll see. It's going to give us a much better views. We'll finally have a week that's normal, no holidays, no nothing, no OPEX, which is good. The normal economic data will be coming out. A lot of earnings, of course, a lot of earnings. And so we'll definitely see what happens. We know one thing, it's going to be very volatile. Let's just go ahead and say that. Again, I'll cover more of that Sunday, but definitely make sure you watch tomorrow's video because you guys put some really good questions about melt-ups and everything else in there. So I'll cover that in detail. And I'll definitely go on a rant because somebody put something in the comments, which I don't mind them putting in there. I said, thank you for putting it in there. But I will definitely set the record straight on that with no apologies. So anyway, hope you guys have a great weekend, and I'll see you tomorrow.